Hi guys, I'm a software engineer and so I used to think I'm earning decently well, so I must be financially free, right? But recently, a very important person in my life told me that I am not financially free. In fact, my investments are pretty messed up and I don't have enough knowledge. So, yes, he is going to be here and we're going to be discussing about why I'm not financially free, how I can be financially free, how much time it is going to take, how much investment I should make. And I hope you like the video. I thought this is going to be something interesting and something different. So, if you like the video, let me know in the comments. The person who is going to be here is my father. Yes, he is my papa. And he is the strategic planning head of Smart VRC. He has been investing in stocks since the 80s. And now he actually makes videos, helps others invest well, and he guides others. But yeah, I don't think I have enough knowledge, so we are going to get him, my father, here. So, Papa, why do you say that I am not financially free?
Okay, Kirti, let me ask you a question. What do you mean by financial freedom or financial independence?
That if I leave my job today, I have enough money to survive?
For how long?
A year, I guess.
What about balance period of your life?
I'll get another job.
Okay, that means you are free for just 1 year. That is not financial freedom.
But I'm free
Financial
right
freedom
now.
is basically that you have enough amount of savings or investments which can take care of your total expenses for the balance period of your life. It could be 80 years, it could be 85 years, whatever lifestyle you want to live.
Is it even possible to have that much saving, like for a normal 9 to 5 person?
Okay, if you are saying it is not possible, then what is your planning? You will retire one day,
Okay.
then who will take care of your expenses?
By the time I retire, I should have enough money to survive for the
Yeah,
rest of the
that is
life,
what
right?
is the definition of enough.
Okay.
So you need to quantify those. Every person, every person should have smart goals in life. Do you understand what are smart goals?
No.
Basically, I'll link it to financial goals. SMART, it is an acronym which
Okay.
means specific, measurable, achievable, realistic, and time bound.
Okay.
Financial goals in one's life could be buying a luxury car, buying a villa or a good house,
Okay.
children's education, maybe overseas education, children's marriage, and finally the retirement.
But these are so far away, like these might even change over time. I might add few
Definitely,
things, delete few
definitely,
things.
definitely, it may change. The corpus may change, but you have to plan today. Say, suppose today's expenses for an overseas education are 50 lakhs.
Okay.
If somebody wants to send his or her child for overseas education, and there's a youngster who is just getting married, and maybe his or her child will go for overseas education after 20 years. What will be the expenses required? Just take care of, say, 4% inflation.
Okay.
If it is 50 lakhs today, it will be around 1.1 crores after 10 years. It will be around 2.25 crores after 20 years, maybe 3.3 crores or 3.4 crores after 30 years. Depends how you stagger your goals. So for each financial goal, you need to set amount and save accordingly or invest accordingly. For first of all, if you want financial freedom, you should be very clear. Anybody should be very clear of his or her financial goals in life. They may change, corpus may change. You may decrease the corpus, you may increase the corpus, you may drop some of the financial goals, but that corpus can be added to another financial goal. And
Okay.
if you are saving for that today, if you are investing for that today, that is going to help towards your financial freedom.
How can I think of so long term? Like, how do I save even that much?
Very good. See, if you start a disciplined habit of saving or investment today, you will be surprised that the amount is minimal. The more you postpone it, the more amount you will require for savings or investments per month for generating the same corpus.
Okay.
Say now I give you example of overseas education. Say today your lifestyle expenses are 1 lakh rupees per month, just for the sake of convenience. And for similar lifestyle, and say considering only 4% inflation, the expenses required will be 1.5 lakhs after 10 years, 2.25 lakhs after 20 years, 3.25 lakhs after 30 years. So you have to make provisions for inflation, you have to plan accordingly and save accordingly. Otherwise, you'll not be able to achieve financial freedom.
How do I plan inflation plus, the price that will be at that time? How do I calculate
That's
all of
why I
this?
took just the meager inflation, 4%. For on the safer side, you can take 5%. All these financial tools are available on Google. You
Okay.
can just go and Google it. What will be the future value of money considering 5% inflation after 10 years, 4% inflation, or 6% inflation? To be on the safer side, you can plan for 5% inflation and work out first for each set of goal. Say, suppose you want to buy a BMW after 5 years. BMW have a very good model, say X series, which costs around 60-65 lakhs today, which may cost you around 1.25 crores after 5 years.
Okay.
So, if you want 1.25 crores, how much per month you should save? There are future calculators today. See, if you put your money in bank or post office or any these type of deposits, which are normally fetch you between 5 to 7%. So considering inflation of 6%, and if you are in the tax bracket of 30%, basically there's a negative return on your investments and savings. So if you want to plan for financial freedom or financial goals, you should have a systematic plan of investment in some equity, which will you fetch you a decent rate of returns.
So you're saying equity is the best way to save right now?
Definitely equity is the best way. As you have already shared, that I have been into equity investment since 1980s. But let me be very frank with you or the audience that I was not a systematic investor. Neither I had the concept of financial planning or setting financial goals. Whatever came by me, I made some investments. But systematic investments I started from 2015-17. And today I am proud to say that at least I feel I am financially free. I am not dependent on anybody. My investments and savings will take care of my life for another 20-25 years or maybe 30 years.
Okay, got it. What about other sorts of investment? Like, how can we be sure that, okay, equity is the best way to invest?
See, just study the data. Today everything is available on the click of a button. If you see the index, BSE index, I hope you would know what is BSE index. It is a measure of stock markets. Okay, so in 1979 and today it has gone up 600 times.
Okay,
It was 100, then it has gone up to 62,000 today.
okay,
So if you would have invested just 100 rupees, a person who would have invested in say early 80s, today he would be sitting with a corpus of 62,000 rupees. Had he invested 1000 rupees, he would be sitting with a corpus of 6 lakhs 20,000 rupees. If 10,000, he would have a corpus of 62 lakhs. That is just one time investment. If you are habitual of investing every month, then you can create a corpus which can help you in your long term goals.
okay. I have two questions. Number one, that we know that stock market can crash at any time, right? We have seen multiple crashes. Second is that I don't know about stock market. If I invest, like it requires a lot of study and a lot of knowledge to invest, right? If I have to personally start investing, I don't know where to start from. So how do we take care of these two things?
Definitely. Most of the people don't know where to invest, how to invest.
Exactly.
First of all, you have to take care of your financial health. Financial health means today take a stock of your assets, what assets you have, take a stock of your liabilities, what debts you have to pay. There may be zero debts today. Okay, you may have or you may not have any assets, but you have a set of income, you have set of expenses. How much surplus you are able to generate? Say suppose a person's savings is or rather income is 1 lakh rupees, and what I would suggest is basically this is a thumb rule well accepted that at least 20 to 25% of your income should be set aside. There can be three components of anybody's income. One is on your essential expenses. Second is on the lifestyle expenses. Third is on the investments or savings. The earlier formula for savings was income minus expenses. But this formula is wrong. But now expenses is equal to income minus savings.
All right.
So you have to set aside first plan for yourself. So out of 1 lakh rupees, you are able to save 25,000 rupees. Just set it apart. Then plan your expenditure. Don't cut down your essential expenses. Cut down on your lifestyle expenses, which has no limit. Lifestyle expenses means going out for vacations, going out for parties, going out for socializing, which can easily be managed within a budget, because there is no limit to lifestyle. Say if you have to create, if you are planning for, anybody is planning for financial freedom, he will have to sacrifice some amount today and save it for future.
But that's like giving up today's luxury for
No.
tomorrow's saving.
Okay, okay. That could be the concept. But definitely you have to plan for tomorrow. Let me tell you one thing. After this experience of COVID, there are two things or three things which one should never miss. You are lucky enough to be in a company which took care of your entire salary during the lockdown period. But there are organizations
Yeah.
which paid hardly 30%, or they even didn't pay to the individual. So any individual, before planning for any investment or any other expenses, should set aside at least 6 months of expenses for any emergency situation. Second is that if a person is married, he has to take care of his family also.
He or she.
He or she has to take care of the family also. I agree with you. I'm sorry for this. But unfortunately, so many youngsters lost their lives in COVID. Now, who will take care of their families if they had not planned for some term insurance? So, a decent term insurance everybody should take, which should be at least 15 to 20 times of your annual expenses. Say, suppose your annual expenses are 12 lakhs. The ideal is 12 into 20, that is 2.4 crores. It will hardly cost some few thousand rupees per month, or maybe not much, which will not even affect your pocket. But that will take care of the future of family in any eventuality. And another important point is everybody should have some medical insurance if company is not taking care of. If company is taking care of say 5 lakhs insurance, so another 5 lakhs you should take, or a person should take insurance. Because the medical expenses, especially in the COVID, you would have seen, you would have heard, you would have studied that the expenses went up to 10 lakhs, 15 lakhs, 20 lakhs. So emergency doesn't knock on the door. It may land up anytime. So these three things: first, essential expenses at least for 6 months, then your term plan, at least 15 to 20 times of your annual expenses, then third is your medical insurance. Once you are through with this, then you plan for investments. And for investments, basically if you want to really save for future, create a good corpus. It is said in the parlance of investment that compounding is the eighth wonder of the world. The bank interest may fetch you 6%, but stock markets over the long years, in spite of the crashes, 1992's crash, Harshad Mehta times crash, then 2007-8 prime lending crash, or maybe COVID crash, there will be peaks and valleys. But if you take a long time of 5 to 7 years, the market will always go up. Index cannot come down. Index will go up. Now, the question is, I understand you might be having doubts where to invest.
Right. Yeah.
So, I got sixth sense, I would say, that you wanted to basically know where to invest.
Right. Right. Yeah.
See, suppose you are saving 25,000 out of 1 lakh rupees. Entire amount should not go towards equity. There's a thumb rule: 100 minus age. See, a person is 25 years. So 75%, that is 100 minus 25, 75% should go towards equity investments, which
Okay.
will give you a return over the long years, say 12 to 15%.
Okay. Why equity only? Why not like FD, crypto?
Okay. FD, as I told you, will give you a negative rate of return.
Okay.
In FD, basically you are getting around 6%, 5 to 5.5% to 6%. Maximum you put in NSC or those things, you may get 6.8% or 7.1%.
Okay.
Inflation itself today is 6%. And on 6%, if you are in the 30% bracket, income tax bracket, to 31.2% will go towards income tax.
Right.
So the rate of return will be negative. If you want to offset all those and save for future, plan for financial freedom, definitely some amount, reasonable good amount should go towards equity investments.
What about PPF?
So balance, as I said, 75% should go towards this, 10% should go towards gold. Balance you could put in FDs PPF. PPF is a very good investment.
So this 75% you're talking about the amount I'm going to save.
Total amount saved. Say
Okay.
25,000
Okay.
or 20,000 you are saying. So 75% is 15,000 of 20,000. So 15,000 can go towards equity. 5,000, say out of 20,000, 2,000 can go towards gold investments. Today you can buy gold bonds or sovereign gold bonds.
What is that?
It is basically a paper.
Okay.
Which is easily tradable. You need not buy hard gold. So on Demat, through a Demat account, you can buy the gold bonds also.
Okay.
And make investments. Basically, if you are buying ornaments, that is not an investment. It gives pleasure to the family because you are never going to sell ornaments. In rarest of rare cases, you would have seen people selling the ornaments. But if you save through gold bonds or sovereign gold bonds, definitely you can, whenever you want for your financial goals, you can encash them.
Got it. Okay, so now how do I start investing in equity? Like, suppose I don't have you, I want to start all by myself. How do I get started?
First of all, for equity investments, you need to have a Demat account. It is linked to savings bank account, so it is on a click of a button also. Basically, you can open it online also. Open it with a reasonably good broker. Don't worry about the brokerages. You could trust on a broker, maybe ICICI Bank, maybe SDFC Bank, maybe SBI Bank. There are so many brokers, so many options available.
Okay.
With those, you can open a Demat account and start investing. So, first of all, since you do not know ABC of investing, what I would suggest is that first of all, you can start through IPOs. IPOs is initial public offer. Recently, you would have heard that IPO of Zomato. Zomato was listed. It issued shares at 72 rupees. It is trading today at 140 rupees. But the major disadvantages in IPOs is that the issue gets oversubscribed and you hardly get any allotment. Out of 10 IPOs, maybe you are lucky to get in one or two. So, to increase your chances of IPO allotment, you should have Demat accounts in multiple names. Maybe your name, father's name, mother's name, your cousin's name. You can have multiple accounts. Through those multiple accounts, apply for multiple applications and try your luck. But take care that you are investing or you are applying only for good companies. There are many cases where even IPOs they have been listed at negative. That means that the price which they have issued, the market has not even respected that price and it has listed at a discount of the issue price.
But the analysis of which company is a good company itself is like a lot of work, right? Like you only make videos and put on YouTube.
So, like me, there are n number of people who are making videos.
But aren't like these people can also go wrong, right? Like what they might suggest might be wrong. How do we like trust that, okay, this is a good company, this will for sure give us returns?
Kirti, you or your viewers can watch my videos. Basically, some fundamentals are required. I work on 5 P's: the promoters, the processes, the products, the performance, and the peer performance. Basically, if you compare all these, it will hardly take. You can surf on the net also and just read it for yourself, and you will be able to take a conscious decision. There are good people whom you can rely upon, whom you can trust upon. Because say suppose I am recommending today, I don't have any vested interest. And there are so many people recommending today. Just go through their videos, see their past performance, and then take a decision.
So most of the time the decision that you take is right?
I would say I have not gone wrong even once.
Oh, okay, nice.
Means where I have said you can invest, definitely the prices have or the shares have been listed at a good price. And there are cases where I have said better to avoid. Even in those cases, there has been returns. Those slips can be there. But it's better to observe safety first. Like Zomato, there were divided opinions. My opinion was it is a loss-making company.
Okay.
Now, I didn't know or people didn't know that it will get so much of respect from the market. So, most of the investors who invested for this got decent returns. But I had not applied for myself for this. Similarly,
But then you were wrong in that case.
wrong in that case, but you have not lost any money.
Okay, like that. Okay.
That means if I had said invested and the market has got on a negative listing.
Okay, okay, got it.
First of all, we should protect our capital.
Okay.
Second thing is that if you want to see IPO is just by chance, you may or may not get it. Then, since you are a beginner, I would always suggest that one should go through a route of mutual funds.
Okay.
And you can definitely, there are variety of mutual funds available, but again it is difficult also to choose mutual funds. There are thousands of mutual funds.
Exactly.
But again, all the information available. You can surf on the net and see the performance of the mutual funds, how they have performed in the recent past. If you are investing through mutual funds, say suppose 15,000 you are putting in mutual funds every month, then you should not put in one mutual funds. You should have 4 to 5 mutual funds.
Isn't this too much work, like 75% into the stocks and then gold? And
You know
then
how much time it takes per month? Not
Okay.
even 4 minutes. Not even 4 minutes. Today technology has made it so easy that just on the click of a button you can make the investment. You can just give a standing instruction to the bank. Every month as a SIP, systematic investment plan, the amount will be deducted automatically. Even those 4 minutes will not be required.
Okay.
Initially, you will have to, while you are selecting, then you can decide which mutual funds. There should be one large cap, one mid cap. Don't go for small caps initially.
Okay.
Small caps will give you good returns, but I would say don't go for small caps initially. Go for large cap, go for mid caps, 2 large caps, one mid cap, one more balanced fund you can go. Yeah.
For newbies like me, can you talk a bit about what is SIP, what is mutual fund, so that
See, SIP is systematic investment plan. So suppose you decide 15,000 rupees you want to invest every month. And you decide that in a particular AMC, that is asset management company, like ICICI is a asset management company, SDFC is a asset management company. They have asset management companies. These groups, they have good mutual fund schemes, which you can see the performance, and then you can take a decision. But if there are people who are able to even study and invest directly in the equity markets, you can get good advisors also. And direct investments in equity definitely delivers better returns, even better than mutual funds.
Okay.
So I am lucky, as you know, that you had introduced me also, that I am with Smart VRC as their marketing head and strategic planning head. I am lucky to have Mr. Asnani with me, who has been guiding me. And he is one advisor who has delivered returns of 25% per annum compounded, whereas stock index has delivered a return of just 15%. Mind you that I am not recommending that people should go for a smart VRC.
This is not a promotion.
It's not a promotion, but I'm just sharing my experience. Those who are really interested can go to the smartvrc.com and see for themselves. And there will be n number of such equity advisors. But basically, Kirti, I write articles also, as you know. In fact, today I have written today the article has been published on this Sunday. The article has been published, Smart Investments of Gujarat, both in English and Gujarati editions, where I have compared financial advisor versus equity advisor.
Okay.
And the next article which I am writing today and will be published maybe in a few days will be on how to select an equity advisor.
Okay.
As you choose your doctor, you take care of his qualifications, you take care of his experience and the brand image he is carrying. You choose your doctor if you have to consult. Similarly, you should be very particular for choosing an equity advisor.
Okay.
How many years experience he has. So those way, if you are able to find a good equity advisor, I would suggest that is an ideal route.
Okay. Just to mention and avoid comments, so he writes in newspapers for free, so this is not a promotion, like even the newspaper, nothing is
Basically,
promotion.
Kirti, as I have shared with you personally, let me share it in public. See, I have taken up this, putting up small videos on YouTube or writing something, is just to help Generation Z and millennials. Even if one out of so many people, if they are able to get some value out of these discussions or out of the videos I have made or out of what I am sharing on through the newspapers, and is able to invest and get decent returns and plan for his financial goals and get financial freedom, Nothing can be better than that.
Right.
And this is all for free. Nothing. I don't charge anything for it.
Right. Any last advice for all the viewers, like, who are just getting started? Last piece of advice.
I think there was a dialogue in some of the Hindi movies: entertainment, entertainment, entertainment. So I would say invest, invest, invest. There can be no option other than investment. And follow a disciplined investment. Put 75%, say whatever you are able to save without sacrificing your, like I would say, essential expenses. Definitely you may have to cut down your lifestyle expenses a little bit if you have to plan for future. He or she wants that his or her son should go for overseas education. Definitely he'll require funds. So he or she has to plan for the funds. And he or she can set a goal today and invest accordingly. There are SIP calculators on Google. Even with a small investment of say 5,000 rupees per month, you can create a huge corpus within next 20-30 years at 15% per annum. And on my channel also there's a video. Those who want can go and see it. How to save for future goals. Where I have given all the calculations. I have compared that if you start today, if you start after 5 years, if you start after 10 years, the more late you start, the more tough investment will get. So that right from very first paycheck, one should start investing, and only for long term. Long term investment will give you good, decent returns. The essence of financial freedom or any financial goal other than financial freedom is that you should be a disciplined investor, systematic investor, an investor for long term. I just want to give you one example. So suppose you invest 10,000 rupees only per month, say at the rate of 15% per annum. After 5 years, the corpus will be around 9 lakhs. Around 9 lakhs. You can see on the calculators. And after 30 years, it will be around 7 crores.
Okay.
For any financial planning, you need to be very clear about your financial goals. Take care of your present financial health, how much you are able to save. Sacrifice if you have to on some of your lifestyle expenses. Save for future and plan for financial freedom.
Okay.
Anything else you want to ask? Definitely anybody can approach me. You can share my email ID also.
Everything is in the description. Feel free to ask all your questions in the comments. And if you would like us to make another video continuing the series, or if you would like us to answer any questions, just feel free to ask. I have a lot of doubts. I don't know about you guys. Just let us know.
Kirti, that basically everybody will have doubts. We have just discussed.
Yeah.
And all the new investors, I would like to add a caution here. Many of the investors would have entered the market recently, and the market has delivered, I don't have any words, but returns which have never been delivered in the last 1 year because the market had crashed.
Right.
And similar returns you should not expect in future.
Okay.
A decent return which can be expected is between 12 to 15% over long term.
Got it.
And if you are happy with 12 to 15%, definitely you should plan for investing through equity market.
Great. Thank you so much for coming.
Thank you, Kirti. It was my pleasure. Thanks a lot.
Bye.
Bye.